Welcome to the Utah Homebuyers Quest podcast with Nelson Bars. Our mission is to give you hope, knowledge, and encouragement on your quest for home ownership.
Housing affordability is at its worst point since 1986.
Higher mortgage rates are impacting Utah's housing market. Potential buyers out there being priced out.
It's getting tougher by the day to afford a home.
Many factors are making it very, very difficult with no relief in sight.
Homeownership may seem like an impossible mountain to climb in today's world. We're here to say that it is possible, and we're here to be your guide, to climb with you, to urge you forward all the way to the closing table. We believe in home ownership, and we believe in you.
Well, hello again, home buyers. Welcome back. I'm so excited that you're here again. Today, we're going to dig into how to fix ugly credit. Have you been told that your credit's too low for a mortgage, or have you been quoted some terrible interest rates and fees because of your low credit score? Or have you been counting yourself out of home ownership due to bad credit? If so, this episode is for you. Today, I want to simplify credit a little bit and talk about how you can fix bad credit fairly fast. So there's 3 levels of bad credit, I would say. There's a simple level where we can fix things in a week to a month. There's a mid-level ugly credit, which is probably going to take about 6 months to fix. And if you have really complex credit, it could take 12 to 18 months to get your score up. So let's dive into each one of those categories and let's see what it will take to help you get a better score. So first, let's talk about the simple fixes. If your credit score is in the mid-600s and you're wanting it to be in the mid-700s, this is your category. And why would you want to do that? First of all, better interest rates, better closing costs, lower mortgage insurance. It could allow us to switch your loan from an FHA program to a conventional program, and that would help us avoid the FHA upfront mortgage insurance and the lifetime mortgage insurance that comes with an FHA loan. Also, that would save you money on a lot of things, right? Everything from your insurance to your car loans and so forth. So most of the reports that I see like this that are in that mid to low 600 range, there's not a ton of late payments, maybe some in the distant past, but most of the credit cards are maxed out on a credit report like that. And I've talked to some clients who they're frustrated because they don't know how to raise their credit score. They're not making late payments. They're just watching for that score to come up, and it's not happening. For the most part, this can be addressed by your credit card balances, because being maxed out is almost as bad as being late. So they call this the utilization ratio. How much of your credit limit have you utilized? And if it's 100%, it is really going to hurt your credit score. If it's over 100%, it's even worse, right? So what we can do in this situation is a rapid rescore. You basically fix that and rescore your credit. And I'll talk to you about a client I had who just came in yesterday with a 675 credit score. But our score predictor model that comes with your credit report said she could add 40 points. And it even tells us exactly what she would need to do. And all it said was to pay off, or not even pay off, just pay down 2 credit cards. She has 2 credit cards with a $500 limit. Both of them are maxed out. One of them is slightly over the limit. So what she would have to do is take some of the money that they have set aside for down payment and go ahead and pay off the credit card or pay it down. The best scenario for her was to pay them down to around $50 balances and then get me an official statement or a letter from the creditor, which we will then submit to the credit bureaus for a rescore. Takes about 3 to 5 business days. We pay for this. There's no charge to you for this, but it comes back usually exactly the way it was predicted. As long as nothing else changes on your credit report, then the rescore will work and you'll come back and we'll have a brand new credit score that we can use to establish your rate and get you approved for a better program. The other way to do this, though, is just to wait a month, because these new balances will naturally update. These creditors will report, usually they report once a month around the statement date of your account, to the credit bureaus what your new balance is, and that will do the same thing. Your score will come up organically. So if you have time to wait, that's simple. If we need to do it quickly, we can do a rapid rescore for you. We've helped a lot of clients like this. We had one client, she had one credit card, and it wasn't even a credit card. It was like a $100 line of credit that was tied to her checking account, so it looks like a credit card to the bureaus. And when we pulled her credit report, it was 625, and it said if you pay that off, your score will go up to 725. That, for her, that was super extreme because she didn't have any other revolving lines of credit. So she went from 100% utilization ratio to 0 utilization ratio, and everything else on her credit was nice, and it basically gave her 100 points. So there's another way too. So if you want to address a bad utilization ratio, you can either pay down the balances or you can increase your limit. So if you just called these creditors and you said, I have a $500 limit, I'd like to double that, they'll probably take a look at your credit and say yes or no. And sometimes when you're maxed out, they'll say no. But that's another way, right? We're just trying to fix the utilization ratio, trying to make so you're not maxed out anymore. And just make sure you don't go use that, right? Don't go max it out again. We're trying to show the scoring formula that you can handle open credit and not use it, right? Just remember, if you're maxed out, you are high risk, and that's what a credit score is. That's a risk score for the lenders. Now, if you're in this situation, just give me a call. Let's use the analysis tools that I have to give you a concrete game plan so you can see exactly what it would take. There's no charge to you for this. If you also have late payments, now that's another story, and that's where we're going to start getting into the mid-level ugly credit, and I think some of this will benefit you as well. So when I'm talking about mid-level ugly credit, I'm talking about people with credit scores in the 500s, and they're hoping to get into the 600s to qualify, right? These type of clients usually have a good handful of late payments. Some accounts are currently late, and some accounts are going to collections. Maybe there's a car repossession in the past. Technically, you can still qualify for a mortgage with a credit score as low as like 520, but it's not ideal. You're going to have to do a higher down payment. You're going to have a higher interest rate. So how can we fix a credit report like this? This is where I want to tell you my favorite analogy about credit, and that is the topsoil analogy. If you have an ugly garden, let's say it's rocky and it's full of weeds, how would you take care of it? You'd pull the weeds. It would still be ugly. But if you put topsoil on top of it, it's like magic. I love it. It's just beautiful instantly. You can do it in an hour, right? Now, this applies to credit reports because the most important stuff on your credit is the most recent stuff. It weighs the most in your score. So if you have late payments last month and I pull your credit, the score is going to be really low. Now, if I pull the same credit report 6 months later, and that was the only blip on the radar and everything has been on time since then, the score will be much better because you've in effect buried that old late payment with new, clean, beautiful payments, right? So here's the process. If your credit report is riddled with late payments and collections, we're going to bury those with on-time payments. And just to continue this analogy, every time you make an on-time payment, it's like throwing one shovel of topsoil onto the garden bed, right? So if you only have one active account and you're paying each month, it's going to take a long time for that to build up and cover up and beautify the garden bed, right? You should try to open some more accounts. And I would say 3 to 4 shovels at a time every month, building up on-time payments to bury the old ugly stuff, right? If your credit isn't great, you may need to open secured accounts or something with collateral like a car loan. But any debt account is the same on your credit. Those on-time payments are gonna bury. In fact, a secured loan instead of a credit card would actually look better on your credit report anyway. So I know a lot of the credit unions around here offer products like that where if you deposit $500, they'll lend you $500 and make the payments for you out of that $500. So let me know. I can point you towards some of those programs. But I would recommend getting 3 or 4 shovels of topsoil going every month, maybe more, maybe 5 or 6 every month, because every one of those is going to bury the past. And in 6 months, you can completely change your credit score. Okay, so if you're in that situation, give me a call. I feel like I can really point you in the right direction. I can give you a map, a game plan to where you can make huge progress in just as little as 6 months or less. Okay, now let's talk about the ugliest, most complex credit reports. These are 400 credit scores. They're also looking to get into the 600s to qualify. These clients, they're usually recovering from some really hard times, like unemployment or divorce or a medical situation that set them back or wiped them out financially. And often I find clients who have just stopped paying attention to their credit, and now they want to get a house. And these credit reports have a lot of collections, charge-offs. Most of it's old stuff. We don't even know how much of it is accurate because no one's been tracking it, right? In those situations also, there are usually no active accounts that are working to bring up the credit score. So even if you just stop paying attention to your credit or wipe it out with a bankruptcy, which we'll talk about, you're not going to build your score back up until you open new ones and start making on-time payments to bring the score back up. So how do we fix a credit report like this? For these, I really do believe it's time to bring in the professionals, and there's two types of professionals that we can refer to here. One would be a credit repair agency, and the other would be a bankruptcy attorney. So let's talk about credit repair for just a minute. You can pay a company a monthly fee to begin untangling the mess. Usually they have attorneys on staff, and they start negotiating with each account. They're going to send letters requiring the creditors to prove the data that they're reporting to the bureaus. They can negotiate for goodwill deletion on accounts, or if they're going to negotiate a settlement for you, they can negotiate for a pay for delete type of agreement where you pay half and they agree to remove it from your credit. Each creditor is different, but these guys do the negotiation and the cleanup for you over time. Here in Utah, we have an excellent credit repair agency that is focused on helping you get qualified to buy a home. I always refer to Premier Credit, and I'm going to see if I can get the owner, Alex, to come on the show for an interview about credit repair. But you have to be careful with credit repair because I feel like there are a lot of unethical credit repair companies. They've been regulated a lot lately, so it's getting better. But, if you think about it, if you're paying a monthly fee to these credit repair agencies, what is their incentive to get you off, right? To help you succeed and no longer need their help. There have been accusations of some companies that are basically trying to keep you on as long as possible and dragging this out so you keep paying the monthly fee. This is why I love Premier Credit. Their whole business model is getting buyers ready to buy, and they believe that will feed them more business from the lenders and the real estate agents who they're supporting and helping to get deals closed. So if you need a referral to a good credit repair company, Premier Credit is highly recommended. You can give me a call and I'll get you in touch with Alex and his team. And then bankruptcy. Let's talk about bankruptcy. Bankruptcy laws exist to help people in this type of situation either start over or work out new arrangements with creditors. So you've got a Chapter 7 bankruptcy. If it's approved by the courts, it would completely wipe out all or most of your debts. If you do a Chapter 7, you normally have to wait 2 years to buy a house. But a lot of people in this situation probably would qualify for a 1-year exception depending on the reason for the bankruptcy. If you had to declare bankruptcy because of illness or death of a wage earner or the loss of a significant job, you may be able to qualify for that 1-year exemption, and we can get you approved to buy a home after 1 year. Then there's Chapter 13 bankruptcy, which is more about restructuring your debts. So the courts would work out a payment plan that you can afford, and you make a single payment every month towards the package of debts that's managed by the trustee. For this, the waiting period to get a mortgage is 1 year from the time you start the new payment plan, if your credit score is good enough, right? It may be difficult to build credit during Chapter 13, but if it's not too bad when you start and then you make your monthly payments on time for 1 year, we can actually help you buy a home even while you're in this bankruptcy payment plan. So if you're considering a bankruptcy, or if you're trying to figure out if credit repair specialists would be better for you, I can help. I can refer you to some trusted professionals on either side of that coin. And honestly, why not talk to both of them before you decide how to go about untangling the mess that comes from the financial hardships that life sometimes can bring. Okay, so there you have it. There's my episode on how to fix ugly credit. The underlying theme here is that you're really never too far gone. And no matter which category you fall into, we can make a plan that will get you ready much faster than you probably thought possible. Even if it is a 2-year process for you to get a home, isn't it worth doing? You know, my mom used to always say, the 2 years is going to go by whether you do it or not. And I think that really applies here. And in what situation would you rather be in 2 years from now? Would you rather be recovered and buying a home, or in the same situation as you are today? Well, thanks again for listening. I hope you'll subscribe and just keep coming back. Every time you listen, you take one more step toward home ownership. So as always, thank you so much for listening, and let's do it again soon.
Thank you for listening to the Utah Homebuyers Quest podcast with Nelson Bars, your place for a strong dose of inspiration and knowledge so you can stay on top of your quest for home ownership. If you have a question or comment for the show, we'd love to hear from you. Visit homebuyersquest.com to record a voice memo or submit your question. You can also join our Facebook community to interact with experts and fellow travelers. Search Homebuyers Quest on Facebook to find the group and join the conversation. But with just a simple click to subscribe, we'll invite you back to the next episode. And remember, we believe in home ownership and we believe in you.